Good evening, everyone. This is Wayne, and this is the video version of the trade report for Wednesday, June 7th, 2018. Well, the markets had a one-track mind today, and that was bullish. We went higher, and then we went higher, and then we went even higher, and we closed on the highs of the day. Stay tuned to find out more. Greetings, everyone, and thank you once again for spending part of your day with me as I go over the action and activity from the financial markets on this fine day in the markets. Markets exploded to the upside today. My pre-market report was a little bit doubtful that there would be as much participation on the part of the Dow and the S&P as there was today, but the Dow and the S&P stepped right up, began to take that lead that was presented by the NASDAQ and the Russell, and they just became part of the pack again. It was rather glorious to observe. Now, you can see on the daily chart of the S&P cash market, this is the S&P 500, we just made mincemeat out of the 1272 target. That tells me, given the fact that we did close on the high of the day, we are well on our way to the 1618. So we closed today at 2772.35. The 1618 is at 2784.73. So another 12 points higher from here is almost a foregone conclusion. Now, I say that because once a target has been met and exceeded, the next target is in sight. And it's really in sight at this point. The one thing that I do have my eye on, and I would be remiss if I didn't point this out, we do have a bearish Ichimoku cloud pool cloud formation. And there is the possibility that the market may retreat toward to or into that pool. Now, a pool doesn't have as much energy behind it as a squeeze pinched area. There's less energy associated with the magnetic quality of this pinched area. The pool is more like, please come and allow yourself to enjoy the pool. I mean, it's more of an invitation. And the market oftentimes accepts that invitation when there's a pool. So anyway, that is what I'm looking at as it relates to the other side of the spectrum and the story as it relates to what the market did today, which was just absolutely scream to the upside. And it did it in a very beautiful way. It stair-stepped its way up. It didn't just blisteringly fly to the upside, although there were moments when it did have a popping quality to it. So anyway, the daily chart looks very bullish. It bears mentioning once again that now that we're above this 618 at the 2745 level, that we were going to go higher. And that's exactly what's happened. Basically, that was the green light for the market to begin getting bought. Yesterday, we closed with a doji. That means that we basically closed very close to where we opened. And it looked a little bit undecided, which is what a doji signifies, that we would actually get some buying. And in the pre-market, things were looking a little bit dicey. So if we take a look at the pre-market, and let me go ahead and just kind of open this thing up a little bit. And so this is the pre-market trade starting from yesterday at 3 p.m. Pacific time, 6 p.m. Eastern time. We dropped a little bit, and then we basically went straight up until we challenged this 100% symmetry resistance. And as resistance normally does, it wins out over a price move. And of course, price dropped. And then it tried to regain itself, and we had this rather significant sideways action for about 3 hours in the pre-market. And then we dropped. And then we started getting a little bit of buying coming in, and then we had a real big drop. I have no idea what that was all about, but basically that replicated what happened yesterday. We had a little bit of a move to the upside, and then we collapsed. And if you recall, we had kind of a V bottom yesterday. Well, that's what I was looking at for today. And when price got up to this 100% line, which as you recall in the pre-market, it got rejected, I thought, okay, now we're going to come back down and maybe 27.56 will be support. The market never looked back. And as you can see, we went higher, stabilized, went higher, stabilized, and into the close, we had buying programs, basically algorithms, and short covering contributing to what ended up being an enormously bullish day. We closed at 2772.50 on the S&P futures. So let's take a look at the indexes real quick. The cash indexes that is. The Dow had one of its biggest days in a while. It closed up 346 points. Just a beautiful move. And this is the highest the Dow has been since February 16th, folks. So that's a while ago. So all of these markets are actually looking quite bullish. Now the Dow was kind of the laggard of the bunch, and it required the banks to kind of catch on. And the banking sector did a great job today of moving the Dow higher. And it provided some inspiration for other sectors to also jump on the proverbial bandwagon. Now, this is the S&P. Again, the last time that we were this high on the S&P was March 14th. So, you know, we've got this rather significant period of time here where the markets were languishing. And I say the markets, I should say the Dow and the S&P, because the NASDAQ and the Russell, I mean, they have really been what's gotten this market back on track. Gotta give credit where credit is due here. Let's take a look at the Russell, up another 11, almost 11 and a half points today. This thing is just white hot. I mean, all-time new high, all-time intraday high, just everything hitting on all cylinders. The 2618, which is, I'm trying to remember what the Fibonacci Queen calls the 2618. I know that she refers to it as a very rare target that periodically gets hit in markets that have an enormous amount of momentum. And that's pretty much what this market is all about. The Russell has an enormous amount of momentum. And I think it's going to find this 2618, 1696.16. Now, I'm looking for 1700. I actually have a trade in place that will benefit immensely from the Russell finding 1700. So it closed today at 1675.95. 25 points higher will get us to 1700. I think we can do that by the end of the week, given what we're seeing here. Right now, the mentality, the sentiment, the momentum, the dynamism, the fact that we're in an accumulation cycle, we've broken through levels now that we haven't seen for a couple of months. The market is getting used to the state of the world now. And it's a very powerful symbology, I guess, when a market adapts to its, and boy, you know, I'm trying to avoid saying this, but I'm going to say it. You know, it adapts to its new normal. And the new normal of this market is being exemplified by a significant drop in volatility. And I'm going to show you the VIX before I show you the NASDAQ, because the NASDAQ is unbelievable. All right. Yeah, we look at this chart every day, and there's a reason for that. Volatility is the single most important metric in the market. It encompasses sentiment, momentum, energy. There's a certain intuitive quality to it. It's vital that if you are going to be an active participant in the financial markets that you understand volatility. Right now, we've got the VIX peaking down below this downtrend line. And I mentioned yesterday, if it goes lower than this, we are going to go higher. Well, here we are. We really went higher today. And the VIX is currently trading, except for this little pop to the downside here, which I'm not really going to say that counts. That actually might even be a bad tick. But we haven't been at this level since, where are we at here? We are right here. I think that's January 29th. Yep, January 29th. So volatility hasn't seen this level since January 29th. And that was on the way up. This is on the way down. If we look a little bit further back in January, we see single prints. In other words, we see 8 and 9 prints. Today, we closed at 1164. Yeah, we can still go lower on the VIX, folks, which means we're going higher on the broader market. I actually have a target of 2,800 on the S&P. I think it's perfectly reasonable for it to get there. Now, speaking of 2618s on the S&P futures 15-minute chart, not the daily chart, we've got a 2774.75 target, and it looks like it's about ready to hit that as I speak for the 2618. Now, that's off of, I think it's this move in the pre-market to this low. So, I mean, this is just a huge, huge move. So the next stop on the way up is the 786 of a longer term move at 2803.71. I think we can get there by the end of this week. That's only 27 points away, actually 26 and a quarter. So lots of energy in this market to the upside. The bulls have finally gotten some traction. They finally figured out the code. The bears are scrambling. They're covering their shorts. The market is basically back in a modality, a mode, I'm trying to think of something really special and artistic and creative, but I'm at a loss for words. So, which I know is a rare and epic event for me. Suffice it to say, the markets are absolutely on fire, and they are exemplifying that by just getting bought, and it's about time. It's like the energy that has been waiting to be exploited is finally been released, and it's kind of magical. It's kind of amazing, and it's been a long time coming. So this market, 2,800 is my target on the S&P futures. So we do have to look at the NASDAQ, but real quick, let me just notice something. So NASDAQ is moving higher, Dow is moving higher, S&P is moving higher, Russell is moving higher. All indexes are moving higher together in the reset. And we've got about 5 minutes left until quiet time comes, and then the markets will be quiet for about an hour. I think we're going higher, folks. I mean, this market's just amazing. All right, let's take a real quick look at the NASDAQ, and then I want to show you a couple trades I'm in. All right, so the NASDAQ composite, which is where everybody on the news stations takes their numbers, up 51 points. Just a bust to move. Just a total and complete unadulterated bust to move. And we still have that Ichimoku cloud pool here, but it appears as if it's getting ignored to some degree. That doesn't mean it will be ignored forever. It just means it's going to be ignored for now. The thing that is more important, and I alluded to that in my earlier discussion in this video of the Ichimoku cloud, is the pinch. The pinch will get the attention of price, and that comes into play on June 21st. That is when the full power of the pinch comes into play. And that will be not next week, but the week after. So 2 weeks from tomorrow, basically. So we've got another couple weeks of this market potentially going higher. It seems implausible that it would go higher for that long of a period of time, but it almost seemed implausible that it's done what it's done so far, especially the Russell. But the NASDAQ hot on its tail, and the S&P and the Dow provided some much needed participation today to make this not only a rotational, but a full market participation move. Now, interestingly, Amazon went lower today, but it needed a little bit of a break. It started off higher, went higher, and then pulled back. This is really healthy. This is important. I think we're going to find like 1735, this 1618, possibly tomorrow, maybe Friday, and maybe even higher, maybe up to like 1750. We'll see. Apple closed up 67 cents today. There's a very interesting market move that I want to show you, and this is one of the trades that I made. This is a chart of Tesla. Yesterday was Tesla's shareholder meeting, and there was a question as to whether or not Elon Musk should be afforded as much power and as much oversight of Tesla and its operations, and if there should possibly be someone else voted in to share in those responsibilities. Overwhelmingly, the shareholders voted to just let Elon Musk keep doing his own thing. Market really liked that, and it went higher. So let me show you the trade I did. Okay, so this is the risk profile graph of Tesla and the trade I'm in. So I bought a bullish butterfly. I bought the 325, 350, 375 bullish butterfly in next week's expiration. I bought it right about here, and now it's up about $150. And I'm looking for a continuation move. I'm looking for about another $10 to $15 higher in Tesla. And if it does get there, that's about a $400 trade for me. Now, I just bought this today. This is the type of trade that I do continually and consistently, low risk, and $250 of risk for about a $500 target on this. I may end up taking my profits if Tesla has a binary event and begins moving lower. Nothing is ever for sure. Let me put it that way. But if you look at a potential trade and develop a trade thesis and look at the probabilities of profit for that trade based on the metrics that you derive from your analysis and your subsequent trade thesis, you can set up a very low risk, high reward trade like these butterflies and begin really padding your portfolio nicely. Doesn't mean you don't hedge just because you have a low risk trade. You maintain your hedges. But this is how you continually take small bites out of the market. And I say small, $300 is not small. But you don't have to kill it every time. If you're always swinging for the fences, you're going to strike out a lot. So the key is small trades, low risk, high probability, developing a trade thesis consistently, utilizing your intuition, utilizing the tools that you have at your behest, and establishing a methodology that basically draws you to the opportunities that the market presents. And this was one of them. And again, if I hadn't been in the coaching session that I had, but that's a whole different thing. I don't mind that. Being in a coaching session, it's part of what I do. But you can't do everything simultaneously. So I missed what I would say was the bulk of this trade. I'd be up probably $300 or $400 now if I'd gotten into it earlier. But it is what it is. The fact that I'm aware of that is why I'm sharing it with you. I'm not chasing this thing. I understand the momentum in it, and I actually got into it about $8 lower than where it is now. I've been tracking Tesla for years, and I know how it moves. I also know that it can rip your head off. It can go down in a heartbeat. But that's why you take low risk trades. So at any rate, that's the Tesla story. Google played possum today. It was down $4.07. Basically, the big dogs that have been participating in a big way in the market kind of laid low today. Like I said, Amazon closed lower. It closed down 60 cents. Google closed down $4. Let's see. Oh, actually, Netflix went to the green today. It went up $1.65. And Microsoft added another 30 cents. So, Facebook, there's one that went lower, $1.60. So we've got a market that's in kind of a pseudo rotation. It's more of a making a play to catch up with where the Dow and the S&P haven't been keeping track with the Russell and the NASDAQ. So as we look at tomorrow, to say I'm looking for higher prices is partially correct. I'm looking for the market to go higher, but I'm not looking for it to go a lot higher. So I think the market needs to kind of take a breath. It needs to take a look around. It needs to kind of set up base camp here for a day and then reevaluate, look at what's happening, and then just kind of tiptoe higher. That's okay. We don't need to hard charge. There's no hurry. You'd never know that from today's action. I mean, if you look at what happened today, this was just remarkable. We had this. I mean, it just continued to awe-inspire, and you look at, first of all, you got this area here that looked like we might end up basically staying inside the cloud, and then we moved higher and consolidated. Looked like we'd probably hang out here. In fact, this is where the Depop is. And then we went higher and consolidated again. And I started saying to myself, okay, so with the Depop down here, we really do need to come down, right? We went higher again. And guess what? We're right up here now. I mean, this is uncanny. This is really some remarkable action. So, I think the market's done a couple of days worth of work in one day. So we'll see how it plays out tomorrow. That's pretty much it in a nutshell, as it were. And with that, trade safe. Trade what you see. If you choose to trade at all, good night and good trading.